I'm going to focus on applications. So that's the main thing. So first, let's kind of dispel one important myth. And that myth is that blockchain is Bitcoin, and Bitcoin is blockchain. Bitcoin was invented in 2009. It turns out that blockchain is a much older concept. It is still relatively new, but literally invented in 1991 by Haber and Stornetta. So this concept has been around for a long time, but it found its best application when Bitcoin was actually invented. But now, after we've had Bitcoin, there are many different applications that are relevant for this technology. So what is a blockchain? So think of it as a ledger, a spreadsheet in the simplest possible form. So it's going to be a ledger, and it can be easily accessed. It is distributed. And this is a famous graph from a 1964 paper that laid the foundation for the internet. And that foundation basically was a reaction to the possibility of a Soviet nuclear strike on US computing operations. And if you had centralized computing, if the missile hit at the right spot, you're wiped out. Okay, you can do nothing. But if you're distributed, you can take out a piece of the network, and the network survives. Okay, so basically, this technology will be a distributed technology. Many people will have a copy of this ledger. There's not a central copy. It's not maintained centrally. Everybody shares this ledger. It has various degrees of transparency. So blockchain is a technology. There's many different ways to implement it. And I'm going to make that as clear as possible. So the level of transparency could be complete, for example, the Bitcoin blockchain, where anybody can download the blockchain and you can see all of the transactions. They're just plain text. You see everything. One crucial feature is so-called immutability. So this means that you can add to the blockchain, but you can't go and edit the entries. So if a mistake is made, you can do another transaction potentially to reverse a mistake, but you can't go back in history and edit that mistake. So it's a very important property. And the last key property is that it's cryptographically secured in a very special way. And I'll go through the details here, but essentially there's a link from the last line. We group transactions into blocks, and there's a link between the last line and the first line of these blocks that are side by side. So that's kind of like the chain aspect of this, this ledger. Okay, so what about the problems that it solves? So there are two basic ideas here. One is it allows us to verify ownership in a very simple way. So you go and check this ledger that we know we can't go and edit, and it verifies the ownership of an asset or a service. And the second aspect is the efficient exchange of ownership. So go into the ledger, you can see that somebody owns something, you can do a transaction and transfer the ownership to you, and we're done. Okay, so again, the security is very important here. The lack of going and changing or rewriting history is very important here. So it's very quick and very efficient. Okay, so let me motivate with a few applications, and I got more applications later. This is one of my favorite applications. This is a picture of the New York Stock Exchange in the 1920s. In the 1920s, it took 5 days to settle a stock transaction. In 1995, there was a revolution. It was a technological revolution that allowed us to move from T+5 to T+3. 3 days to settle a stock transaction. Today, it's 3 days. And that makes no sense whatsoever. And the technology that we have today, to have a 3-day settlement is laughable. Okay, so blockchain has the capability of doing that nearly instantly. Okay, so that's an obvious application, and this is being tested out in many stock exchanges. Probably the first one that will transfer to a blockchain-based technology is Australia. Okay, so Australia was picked because it's a developed market. It's not a huge stock exchange. It's going to be tested out there and then moved to other stock exchanges. Property. I'm not sure how it is in Sweden, but in the United States, it is extremely frustrating to do a land transaction or a house. So I go and I have to hire a lawyer to make sure that the person I'm buying the house from actually owns the house. And to get a mortgage loan, I have to pay somebody for title insurance, because the bank doesn't want to loan me money to buy a house that actually isn't owned by the person I'm buying it from. Okay, so again, this is a perfect application of blockchain. There's a ledger with the ownership and all the liens on all the property within, let's say, a municipality. You go in, you check to see who owns it, you do the transaction, and it's very efficient, very inexpensive. The lawyer's work is greatly reduced, and the people that do this title insurance are out of work. Okay, so this is going to be a common theme. This is a peer-to-peer technology. Any peer-to-peer technology, there will be disruption of the middle people. They will lose their jobs to your benefit, unless you're a middle person. Okay, SWIFT is the messaging system for wire transfers. It is constantly under attack. And sometimes the attackers get through, but this is a legacy technology. It doesn't make any sense. And blockchain technology applied to money transfer is the lowest hanging fruit today, and has been for quite a while. So I often show slides of Western Union and their money transfer fees, which are just, well, I shouldn't be too strong in the words I say. It's just so unfair. And they will be disrupted by this technology. Counterfeiting. Okay, so this is a really big deal. The average wallet size with US dollars, so you take the amount of cash and divide it by the number of people in the United States. And I ask my students, well, what do you think that is? And there's, well, maybe $15, maybe $30. How about $2,000? Okay, so this is a huge amount of cash out there, and a lot of it, I'm afraid, is counterfeited, and by you know who. You need hard currency. This is, forget the sanctions. This is the easiest way to go. Okay, what about a technology, again, to verify ownership? You get into your car, you put your thumbprint on your smartphone, a blockchain is checked, you own the car starts. Okay, now let's change the story a little bit. You bought the car, but you also got a loan. So, and in the contract for the loan, it says that if you miss 3 monthly payments in a row, then you're in default. So you've missed 3 payments, you get into your car, thumbprint, car doesn't start, but it starts for the bank. Okay, so these are the possibilities. You could think of going into your apartment or house, the same idea. You're checking this ledger for ownership. So again, this is fundamentally a peer-to-peer technology. What I'd like to do to begin with is to talk about a public blockchain. And Bitcoin blockchain is the one that I will talk about. It's not the only public blockchain, but let's talk about it to start with. Bitcoin has been around since 2009. There's other protocols like Ethereum. And for kind of business applications, most of the business applications are in Ethereum. I'll talk a little bit about that. It's a different type of blockchain in that it allows for contracting. It allows for conditional events. So if something happens, then there is an action. That you cannot do within the Bitcoin protocol. Okay, so there's a lot of detail here that I go through in my course. All of my notes are available on the internet. So if you're interested in this, you can go to my website and get much more detail on this technology. Okay, so the difference between a public blockchain and a private blockchain is a matter of trust. So in a public blockchain, everybody has got a copy, everybody is verifying the entries. There's no centralized mechanism whatsoever. In a private blockchain, you need to trust somebody. So one crucial question that needs to be asked, if somebody's proposing a blockchain technology, you first determine whether it's a public technology or a private, and you need to kind of figure out what the application is best suited for. So do you need to have something that's trustless? It's not necessarily true. So for example, in transfers of money, today we use the banking system and we trust the banks to actually do this. There's many possibilities of implementing a private blockchain that greatly reduce the cost of transfer, but you still need to trust the banks as we do today. Okay, so when you go trustless with a public blockchain, it involves a lot of cost. Okay, so it is a trade-off, and it's an important trade-off that you need to ask all the time. I should also say that there's thousands, if not tens of thousands of firms that are proposing blockchain technologies. And indeed, the hottest thing today is something called an ICO. So everybody knows what an IPO is. So ICO is an initial coin offering. Okay, so a coin that's tied to a blockchain. Beware. Okay, so really beware, because most of those, they're just basically bandwagon. I've seen so many of these things that are pitched that it's not a good application in the blockchain. It's not as secure as it should be, but people are buying it because they think it's going to go up in value. So there's a lot of hype right now, and part of my job as an instructor in this area is to tone it down. Okay, so as you'll see. Okay, so cover the economists we should really understand, but it's amazing to me how few people do understand this particular concept. This is, Bitcoin and all of the other cryptocurrencies, the value is about $100 billion, which is sizable, but still pretty small. But the sort of applications that we're going after, I talked about stock clearing. This is derivatives clearing. So DTCC is essentially committed to a blockchain technology for clearing of derivatives. That's an $11 trillion market. So this is a big deal. Okay? And another message that I want to get across is it doesn't matter what is going to happen to Bitcoin or Ethereum. So if they go away, which they could, all of these blockchain applications are still viable. Okay, so that's why it's really important to kind of separate the cryptocurrencies from blockchain technology in general. So you don't even need a cryptocurrency for a blockchain. The concept is very general. Okay, so let's actually go through to understand what's going on with the Bitcoin blockchain to start out with. Okay, so the Bitcoin blockchain, it's distributed, as I said, it's public, it's transparent, establishes ownership, and allows for efficient exchange. Anybody can download it. It's not a huge file. I think it's about 130 gigabytes right now. And every single transaction in the history of Bitcoin is in this ledger. You can see every single transaction. Okay. It is, I'll go through this a little later. Bitcoin actually got some free publicity early on with people doing illegal transactions. And even today, with WannaCry, you had to send $100 of Bitcoin to an address. Like in a way, that wouldn't happen if the people that are doing this activity were in this room. Because they would realize that there's a problem. And the problem is that the immutability of the ledger is such that if you do an illegal transaction, it's in this ledger forever. It's not really anonymous, because as soon as you spend, we can probabilistically figure out who you are. So it is the worst possible technology to use for criminal activity. The court case is very short. Here's an immutable ledger. Here's the transaction. Guilty. It's way better to use cash. Way better to use cash. So again, the Bitcoin blockchain doesn't depend on trust. It is backed by strong cryptography. I'll prove that to you. And then there's another set of actors that are involved, the so-called miners. And I will describe what they do in some detail, because that's important. So how powerful? It turns out that the Bitcoin network of computers that are verifying and securing these blocks, the computing power is 84 million petaflops. Okay, so this is just an amazing amount of power. It's unprecedented. And the way I like to think about it is the fastest supercomputer in the world is 93 petaflops. So 84 million versus 93. So this means that you talk about hacking the Bitcoin blockchain, it's just not really that feasible to do. Even if you're a state actor, a nefarious state actor, to amass this kind of computing power is just extremely unlikely. And even if you do, what you can do is maybe disrupt the current transactions. You can't go back and rewrite history. It's just not feasible to do. Okay? And maybe can't is too strong of a word, but it's just so improbable given the security here and the computing power. So what is the security? And I'm going to take you through something that I spent a lot of time in my course on, hashing. And I think you should know this. So you will at the end of my 5 minutes here. It is a little painful, but let's actually do this. So hashing is cryptographic hashing, not hashtag. And I'll give you a simple example, then we'll go through a more complicated example. So suppose that I want to send email to Marie, and I'm concerned that the email might be intercepted and changed. So this is the trick I'm going to do. The email is a single word, hello, and I'm going to do a simple hash where I assign numbers to letters. So A is 1, B is 2, Z is 26. And then what I'll do is multiply all those numbers together. So we can see up here that we've got hello, and multiplied together, it's 86,400. So Marie knows my hashing algorithm, and what she does is get my message, and then she can do the same hash. I post on my website the 86,400. She does the hash of my message, gets 86,400, and she knows the message is secure. So if it was altered, I give an example. Suppose the E is substituted with an A. Then when you do this hash, you get a totally different number, 17,280. So if it was corrupted, she would see that and then ask me to resend the message. So this is actually happens all the time in the background. You just don't know it. Another word for this is checksum. So this is a hash that's way too simple. And the reason is that if the letters are changed in terms of the order, and an example here is if I altered the message, instead of saying hello, I say, oh hell, which has a different meaning. It's the same hash. you get 86,400. So when you've got two different inputs, oh hell and hello, delivering the same output, that's called a collision. And we want to avoid collisions. So we need to use a more complicated algorithm, and that algorithm is called a SHA-256. And it's kind of a standard hashing algorithm. 256 denotes the length of the hash is 256 bits. So 256 zeros and ones. Okay, so this is a standard algorithm that actually is hardwired into all your smartphones. It's happening all the time. You just don't know it. So let me actually go through what's happening here. And I'm going to jump out to the internet and do a hash for you. So I just typed in hello world. And now I will do the hash. And it's not going to be 256 zeros and ones. I'm going to do this in hexadecimal format. Hexadecimal is 0 to 9 plus the first 6 letters of the alphabet. So it's base 16. So it's shorter as a result. And you can see that the first 4 letters, 315F. Okay, so that's a SHA-256. I should also say this stands for Secure Hashing Algorithm. It's invented by the US NSA, which you should be maybe a little suspicious about. But nevertheless, this is not encryption. This is not what we're doing. Because encryption, you encrypt a document with a key, and then you can decrypt the document. This is a one-way function. It doesn't matter how big the input is, it's going to be 256 bits. It could be a single letter, it could be hello world, it could be something enormous like a video that's 10 gigabytes, 256. Okay, this is how it works. So what if I change this and instead of hello world, I put a 0 after it, and then do the hash again? Notice it's different. So at the bottom, it's 312A. And notice if I take the 0 out, go back to the original, it's 315F. So we get back to the original. So this is not random. This is deterministic. And that's important. The last one I'm going to do is, instead of a 0, what about 4250? And do the hash. Notice that the first 4 letters are 0, 0, 0, 0. So that's kind of rare. So to get the same character at the beginning in a row 4 times, that is, well, to get a 0 is 1 over 16 probability. And the probability of getting 4 is 1 over 16 to the power of 4. So it's kind of rare to actually get that. Okay, so file that away, because we're going to return to that. But let me go back to my presentation. And I do a few hashes here, like I told you it doesn't matter what the input is. That's the Bible, the first line. And then the second one is where I delete the last word, amen. Totally different. And also, you can do a hash of the hash. So you're not satisfied with just doing a hash, you can do a hash of a hash of a hash. Okay, it's very quick. As you saw, it's very quick and very easy to do. The actual algorithm, I've got a lecture that I do on. It's a very painful lecture for my students, 2.5 hours of every single step. And after that lecture's over, it's very clear that there's nothing in this algorithm that you could use to reverse the hash. There's no way to do that. And frankly, it just doesn't make any sense, right? So how can I go from 256 bits and recreate like a 10 gigabyte video? That doesn't make any sense. So again, this is a 1-way function, very important. Technically, you could undo the hash, but it's a lot of guessing. And it's like 2 to the power 255, which is a very large number. There's the number of atoms in the universe, approximately. Okay, so that's a long time to break. Okay, it's just not feasible. As I say, it's not impossible. It's just not feasible. Okay, so let's return to the email example. So I send an email to Marie. I do a SHA-256, post that on my website. She gets the email, does the same hash, checks the hash, make sure it matches the hash on my website. We're done. There's no collision here. So this is the standard protocol that's used in most blockchain technology, a SHA-256. There are other hashes that are available that are more complicated, like a SHA-512 or SHA-384. Indeed, go into your email, and if you use Outlook, for example, go look at properties and show the full header of an email next time. And you're going to see SHA-256, SHA-384. It's all over the place. This is kind of standard stuff. It's under the hood. We actually don't think about it, but important. This example actually kind of hits close to home. This is from the Wall Street Journal. And this is the WikiLeaks guy who's in the Ecuadorian embassy, as you know, in London. And this was during the US election. And basically what was happening was Hillary Clinton's campaign was being disrupted by WikiLeaks releasing information. So at some point, the internet was cut out at the Ecuadorian embassy, where Julian hangs out because of extradition to Sweden, right? So the internet was cut, and then 3 tweets went out. And this is one of them. And right here, I've reproduced it. And the Wall Street Journal describes it in kind of a funny way. My students laugh at this. Says each one begins pre-commitment, then the number 1, 2, 3, followed by a short phrase, and then, quote, an assortment of 64 letters and numbers. Well, here's the assortment of 64 letters and numbers. That assortment is a SHA-256. So you know now what it is. But the question is, like, why? Why would you do a tweet like this? And basically it says, John Kerry, here's a SHA-256. We can't really invert it, but it's probably proof that they have a document that is very damaging to John Kerry. So within the US government, it's kind of standard to take documents and do hashing. So they can actually trace what document he's talking about. And to have that SHA-256 is essentially proof that you've got the document. So interesting. So Wall Street Journal didn't know the SHA-256. You know it now. So okay, so let me go through how this blockchain actually works. This is the same diagram that I mentioned before. And essentially what we do, these are just the actual transactions. And we'll do a SHA-256 of the transactions. And then that's the last part of the block. And then it's repeated at the top. So if there's any change in these transactions, it'll produce a different hash that does not match the next block. And the whole chain falls apart. So let me demonstrate. This is highly simplified example. The hashing is simpler even, but this is just some transactions. And in this block, notice that we've got the block is hashed, and then this hash appears at the top, and then this block hashed, and again at the top. Okay, this is very simple. In block 1000, I do this transaction where I buy a car for 17 Bitcoin from John. So I get the car from John, and I pay John 17 Bitcoin. So let's say I go in and do something nefarious. So I make a very subtle change. So what I've done is, all I've done is flip the signs. So I get the car from John, but then I make John pay me 17. There's nefarious action. So it turns out when I do that, the hash changes. Any subtle change will cause the hash to be completely different. So this hash no longer matches the first line in the next block, and as a result, this block is invalid. It's thrown out by the network and replaced with the valid block. So it's almost futile to go and think about changing history, because automatically this is being checked all the time. If we don't get the exact match, then the block is thrown out. Okay, so there's one additional thing that I haven't told you that I'll tell you right now. It's not as simple as just doing a hash of the block and then repeating it at the top. What we actually do is to look for a very special hash. So what people will do that are called miners is they'll take the transactions and then they'll just add a random number called a nonce, and then do the hash. And what they're going to try to get is a special hash with a lot of leading zeros. I showed you one with that 4250 that led to 4 leading zeros. So think about this computing power cycling through different nonces. And it could be a 0, a 1, 4250, 63,456,000. So just cycling through different numbers, trying to find a special hash. So thousands, tens of thousands, trillions of hashes are happening every second, trying to find this very rare hash. So that is important because we want to make it very difficult to go back and rewrite history. So to rewrite history, you have to go block by block backwards through time. And if we make these hashes very rare, it's just not feasible to do. In the Bitcoin blockchain, blocks go on every 10 minutes. Okay, so it's just not feasible if we make this difficult to actually do. So a nonce or magic number is used, and I kind of think of this is a simple way to think about it. You've got 5 decks of cards, you shuffle, and then you deal out the first 5 cards, and you're looking for 5 aces of spades in a row. That's going to be a lot of shuffling before you actually get that. And that's what these miners are doing. So they're providing verification. They're providing this difficulty to make this blockchain very secure. Okay, the current state of difficulty is about 18 zeros in a row. Okay, it's extremely rare to get that. And that's why the computing power is so intense to actually do that. Indeed, the computers that are used for this are specialized. So they're not CPUs or GPUs. The chips are basically designed to do one job, and that is a SHA-256. That's all it is. So it's highly specialized computing power. It's difficult to get. Indeed, a lot of the mining happens in China, and one of the reasons is that that's where these chips are produced. Okay, so it is very secure, and this is essentially how it works. Okay, there's other possibilities that I won't go into in terms of how to secure a blockchain. So you don't need to do this mining. Bitcoin does this because it's trustless. If you have a private blockchain, you can have designated people that maintain the chain that you trust to actually do it. Okay, so you could have a different technology. For example, Ethereum is the same as Bitcoin right now, but they say that they're going to be moving to a voting system. So instead of this system to try to find 18 leading zeros. Okay, so there's many possibilities here to actually do it. And again, I want to emphasize that blockchain is a technology. It's not a single piece of code. Okay, it is an approach, and there's many different ways to secure a blockchain. So let me briefly talk about private chains, and very briefly, this is a big deal, especially for banks, and I've got a banking example. Banking system in the world right now spends about $200 billion a year maintaining this legacy IT infrastructure. Indeed, the most valuable coder today is not somebody that can do Python or JavaScript. It's somebody that knows COBOL. Yeah, and many of you never even heard of COBOL, right? So, but those of us that are a little older, maybe were exposed to it. COBOL was invented by Grace Hopper in the early 1960s, and she, for the Navy. And they wouldn't let her retire. She was working until 83 years old as an admiral, but she's in charge of the COBOL. So I did this presentation, the same presentation, and kind of made a joke about COBOL not that long ago in front of a major financial institution that happens to have about $5 trillion under management. And everybody's laughing, except for one person in the front row who's beat red. I have no idea who it is, but that was the chief technology officer of this company that uses COBOL, right? So, how do we deal with that? It's such a big problem because to go and redo your systems is a nightmare, but blockchain does offer this possibility. It's kind of intriguing. And almost every financial institution is investigating this technology in some way. So think of a simple example of 3 banks and 2 customers. And this is a simple network diagram where banks talk to each other. Customers might have accounts at more than one bank. And again, this is very simple compared to reality where you would have 10,000 banks and millions of customers. But you can see how it works here, different ledgers. Every single bank's got a ledger. Every single customer's got a ledger. What could blockchain do here? Well, basically, everything collapses into a single ledger. It's so simple. When I began teaching this, it was very hard to talk to regulators because regulators are totally fixated on this idea that, well, blockchain, that's Bitcoin, and Bitcoin's used for Silk Road and illegal transactions. We don't want to deal with it until they saw this. So can you imagine a single ledger for financial transactions? You look in one place. It's nirvana for the regulator. Now, all of a sudden, they're very keen on this idea. Okay? And again, this immutability is important also. So it's hard to go back and do the shenanigans that banks sometimes do. So this is just like one possibility for an application. The firm that I feature in my course that I think is the leading edge firm is JP Morgan. And very interesting what they've done. They've got 2 technologies. Quorum is one of them. One of the problems with what I just showed you is if it's an open ledger, each bank can see each other's banks, like the rival bank's transactions, and you don't want that. So what JP Morgan has done with their Quorum technology is essentially you allow parties to transact, but what you put in the blockchain is encrypted. So it actually goes into a blockchain. You can see the encrypted transaction, but the people that are party to the transaction, they've got keys to unlock to actually see it. So it's a very good idea. And indeed, you could have the regulator having the 3rd key. So regulator can see everything. But the rivals can't see the actual transactions. So there's a lot of stuff going on. Indeed, very interesting. It used to be all of these banks were operating with their own private computer programs. This is all open source. And that's a big deal these days. So you could just download this program and use it and learn from it. So this is a very significant disruption to back office. So it's a good thing for investors because the easiest way to get so-called alpha is to reduce costs. And this will dramatically reduce costs. And again, unfortunately, tens of thousands of people, and not kind of low-level jobs, back office jobs, those people will have to find something else to do. And this is going to happen very quickly. This is not theory. This is actually in operational stage. Okay, so let me go to a few more applications. We'll have time for questions. And what I want to do is to give you a glimpse of the future as I see it and the potential applications here. So I think of the internet in 3 different stages. The first stage was just basically viewing information. So Wikipedia, you go and you consume the information. You go to the New York Times, you consume the information. That's the first stage. The second stage is the social media stage. So this is Facebook, Instagram, Twitter, email, whatever. It's basically a social exchange of information. The next stage, which is not realized yet, has to do with machine-to-machine payments. So right now, on the internet, it is very clunky to do payments. So I can put a credit card number in, and that's a real pain to do because it's often not secure. I could put my bank account number in. Again, that's very clunky, and I don't want to do that. I could do all this. It's also difficult for me to be paid. Right? So the fees for the credit card, the transfers, all of this make it very difficult to actually do business in terms of payments on the internet. So can we change that with blockchain technology? And I haven't mentioned the fees, right? So credit card fees are enormous. So in the US, 300 basis points for a transaction. And if you fill up your car with gasoline, it could be 700 basis points. So it is very, very large sort of fees. So can we actually do something that is different? So HTTP 404, everybody has dealt with that, right? You know, website not found. What you might not know, and look it up, is 402. So 402 is built into HTTP, and it's a payment protocol. And the idea many years ago, when the internet was, the web was designed, was that they envisioned a time where there would be some sort of digital money. And this has not been utilized yet. So 402, very important. It allows for micropayments. Today, micropayments are not really feasible because of the fees that are involved. Okay, so what does this look like? What I'm talking about is instant payment. So think about the following. My students, they call an Uber. They hop into the Uber. They pull out their smartphone, and they do a survey or two. They get paid instantly, maybe $2.50 for each survey. By the time they're done, they can transfer that money to pay for the Uber. So that's what we're talking. So, so again, very small payments coming very quickly for doing tasks. To get paid on the internet is actually not new. So Amazon Turk is a technology that if you happen to be in the US or live in India, you can do tasks, and then you get paid once a month. That's not what I'm talking about. I'm talking about getting paid instantly. So this allows these micropayments very important. Indeed, I tell my MBA students that if they offered up their profile in the future, I actually believe, given that they're a prized sort of profile, young people that are on a steep vector in terms of earnings, that probably the value of what they could do by offering their profile, doing some surveys, going to websites, my guess is $15,000 to $20,000 a year. That's a lot. Okay, so this is an interesting application. Think of email. So right now, it's a real problem in terms of all the stuff that comes into your inbox. Actually, most of the stuff doesn't come into your inbox. At Duke University, 66% of the email that comes into Duke never goes to anybody's inbox. It's stripped out. That's gone. And I'm not talking about going to your junk folder. So it's stripped out by the server before it actually gets to you. So it's very easy to spam. So think about a different model. And the different model is that there's many people that want to get into your inbox. So you've got friends, you've got family, you've got work, but there's these other people that would like to sell you something. So what about setting a price to get to the top of your inbox? I don't know what your price would be, but let's say $10 to the top of the inbox. And then if you open up the email, another $10. You go to the website, another $10. So you basically, for people that are serious, they're willing to pay you directly for this. That changes the game in email very substantially. And indeed, suppose that every email, there's a price to it. So, and it can be very cheap. Let's say 1/10 of a cent. So even your family sending an email to you, they have to pay 1/10 of a cent. It's no big deal. Even for somebody who's very impoverished, 1/10 of a cent they can probably handle. Okay, so you set the price very low, you eliminate the spam. Okay, you cannot afford to spam anymore, even at a price of 1/10 of a cent. So the other thing that we can think about is the web. Right now it's free. Free is generally a bad idea, right? So I remember the cafeteria in my undergrad where everything was free, and people just piled the food on, and then didn't eat most of it, and then the quality of the food was very bad. So free is not good. So you have to have some price, and again, it can be a very small price. And again, blockchain makes this possible. So it allows the possibility of these micropayments. Okay, so when the transaction fee, think of a world where transaction fees are almost zero. It changes the game very substantially. So again, the web, and this is, I hope people realize this, but there is a monopoly out there that is very substantial. So Google owns 90% of search right now. And it's kind of under the radar because people actually enjoy using Google. Google and Facebook account for 80% of digital advertising right now. So how does it work? And I've given some examples to the right, you probably can't see them, of certain searches. So the second most valuable search is Dallas truck accident lawyer. Okay, so if I do that search and then Google directs me to a particular lawyer, then that lawyer will pay Google $425. Okay, so this is just a money machine for Google. So, and it doesn't make sense. So basically what they're doing is they're taking your information and essentially selling it to somebody. Okay? So I'm actually very negative on Facebook and Google. Okay, because that cannot be maintained. So in a different world, you own your own information. Okay, and if you've had a truck accident in Dallas, then people are going to be paying you directly to go visit their website. Okay, so it's going to change the game very substantially, and firms like Google and Facebook, I believe, are at risk. Maybe Facebook more than Google, because Google is diversified into many different businesses. But this 90% of search, that just cannot basically be maintained. Essentially, they won't break Google up, but they will force them to allow people to own their own data. And what Google does is basically, they know what you've searched for, but that gets stale, and other people can be on your profile. It's going to be that you will create your own profile. You will offer the data that you want to offer, and you will get paid for it. That's the model of the future. And again, the crucial aspect here is having a blockchain technology. Okay, so let me finish off by just a few applications. Voting. This is the Brexit ballot. Okay, so Brexit would never have occurred if we had blockchain voting. No, it's true, and it's simple, because the young people in the UK were very much in favor of Remain. They didn't vote because they thought it was stupid that they couldn't vote on their smartphone, and they're not going to line up in a queue to the voting booth. So with blockchain technology, you get a token, and it gives you the right to vote. Only you. You can't sell the token expires. Very simple idea, and extremely secure also. Instant results. So we'll see experiments alongside the traditional voting, but this is probably the way that will go. The Internet of Things. So this is my thermostat at my house. Somebody can easily hack in and change the temperature to 120 degrees. Do I want that to happen? No. So again, to change the temperature, you need to verify that you're the owner, just like the car. Very simple application of blockchain. Thermostat might not be a big deal, but a self-driving car? Do I want to be in a car where somebody can hack into that car and take it wherever? No. So Internet of Things is basically just wide open to hackers. And when you layer in a blockchain technology, it effectively, probabilistically eliminates that security threat. So one of the biggest growth areas of blockchain is Internet of Things. Prescriptions, it's remarkable to me that in the United States, they still use the handwritten notes. So drug addicts will go in and just remove a pad from the doctor's office, write their own prescriptions, go pharmacy to pharmacy, and collect all the drugs that they need to resell. This is just it's like a voting sort of situation. You go to the doctor's office, you get a token. It's not a physical token, right? It's electronic. Only you can spend it, which gives you the right to go to any pharmacy and get the drug that you need. Everything is recorded. So the regulator can see what doctors are writing what prescriptions and what patients are actually getting. So very simple application. Medical records or any type of records. At Duke University Hospital, which is one of the better hospitals in the US, they've got, I think, like 4 million patient records, and I think they're single password protected. So with blockchain, think of it as every patient essentially owns their data. They've got a password, think of it that way, or a key to their own data. So instead of having a single password, you've got 4 million passwords. Okay, and that data is much more secure. So again, blockchain makes it super easy to do. Financial statements are, again, a legacy of the past. Annual, semi-annual, quarterly statements. Think of blockchain as allowing for real-time financial statements. Real-time. So when it's real-time, there's an advantage because there's a lot of noise in real-time statements, and you avoid all of the incentives to manipulate to get that quarterly number that people are expected the company to deliver. So a lot of ideas here, and think of the exact same data being seen by investors as we see today with this technology, but much more detailed data for the company to actually see. Digital twins. This is a jet engine, and blockchain technology makes it possible to have every single part and every single repair put in a digital record. And then when the engine is sold, people know exactly what's happened. So you eliminate the lemons problem that plagues things like this, and it's blockchain based. Okay, I told you that the wallet size for, excuse me, for the currency is enormous. But I'll also tell you that 78% of all the US currency is $100 bills. And if you go to the US and try to transact with a $100 bill, it's very difficult. It'll say no $100 bills accepted. Okay, so again, what's the reason? That's the reason. That's El Chapo. That's a stash. And those are $100 bills. And we've got, I guess, the 500 euro, 10,000 yen. So with blockchain, you eliminate counterfeiting. All central banks are investing in blockchain. And indeed, I've made this forecast that the first country that will likely go to a cryptocurrency is Sweden. So little cash is actually used here. It's only 3% of all transactions. That Sweden will likely be the first to go to a central bank-based cryptocurrency. Okay, so again, it is essential to use blockchain because with a digital currency, it's the same problem as a digital video or music. You can make a perfect copy. So you need that blockchain technology to make sure that people are not counterfeiting the actual currency. Okay, that's basically where we're going. There's many other applications. This is something the UK put out. And you can see the diagrams, all these possibilities, money transfer. That's energy. So a power grid, energy, trading, all of this is possible in blockchain. Passport. It's an obvious application of this technology. Diamond? So basically, you laser into the diamond a code that goes into a blockchain so that you know the diamond is not a blood diamond. So all of these possibilities exist out there for this technology. So again, I teach a course on this, and there's so many ideas that are possible with this technology. And this year, even one of my student groups presented the idea of smart guns. The US, they really like guns. But I'm Canadian, by the way. We don't like guns. But yeah, so the idea with the technology, mainly for law enforcement, that the gun is smart. It only fires for you. It's got GPS on it, so you know how many bullets are fired, the direction, the angle, all of this stuff. You put it back in the rack, goes into a blockchain. Nobody can change the data. If there's any investigation, it's in the blockchain. Okay, it's a very specialized application, but you kind of see the idea. There's so many things that are possible with this technology. This is not just Bitcoin. Okay, hopefully I've convinced you of that. This is much deeper, and again, if the cryptocurrency goes away, there's other possibilities. So I've spoken a little too long. Is it possible to have like 5 minutes for questions? Yeah. Okay, so are there any questions? And also, I'll be hanging around for the break. Okay. Yes?
Could you talk a little bit about forking?
Oh, man. No.
No.
Next question. Yeah, so, so basically, this is a very interesting technology in that there's many competing cryptocurrencies out there. And then even within a particular cryptocurrency, you could have disagreements. And you could break it into two. So a fork is you've got this 120 gigabytes of transactions for Bitcoin. And then a new currency is started that uses the previous history but goes in a different direction. So it's very interesting because for a person that, let's say you used to have like 10 Bitcoin, so after the fork, you've got your 10 Bitcoin, but then you've also got 10 of this new coin. And you would think that you add them up and get what you had before, but that's not necessarily the case. So it is basically a free-for-all, and you choose what you want. I see the possibility of millions of these blockchains existing out there. And there could be forks, there could be new currencies, that's a possibility. These people are mainly computer scientists. They've relished the idea of attack. So they attack themselves. And basically they learn from that. And they also welcome these forks. I know there's a lot of disagreement and debate, but they just figured this is part of the system to be stronger. And the idea is the best technology or the best fork or the best cryptocurrency will win if it's any good. So you just try all of this out. Indeed, there's other people that are doing very interesting things. For example, the Royal Mint Group in the UK and the Chicago Mercantile Exchange are launching a gold coin. So you put gold in a vault in London, then issue a coin based upon it in a blockchain. So you can literally be carrying gold around in your wallet. So you could be paying with dollars, paying with Bitcoin, paying with your gold coin. And if you kind of take this a little further, well, what if that vault had, instead of gold, 1 million shares of IBM? So now you can go and buy, let's say, 1/10 of a share of IBM, and that's a coin for you. You go to the grocery store, you pay with a fraction of a share of a stock. And what does that mean for trading? It's all of a sudden millions of dark pools all over the world. And this is very exciting to me. I just never thought it was possible. But this technology enables the return of barter. Seriously, on your phone, you've got all these different assets. There's bilateral prices for everything. Pay for, yeah, it's very interesting. Yeah.
Hi, Tobias Wellin from Handelsbanken. Thank you for a very interesting speech.
You got COBOL?
Yes. Could you elaborate a little on the security in the future with a little more sort of quant computers and so on? What does that do to security?
Sure. It's a very good question, as I would expect. So this computer program, you might wonder, well, what if computing power advances? And in the program, in Bitcoin at least, it allows for a block to be formed every 10 minutes. Okay, so if there's an advance in computing power, or if more computers come on the network, then the program automatically adjusts the difficulty. So instead of 18 zeros, maybe you go to 19 zeros. Or if computing power comes off the network, maybe you go from 18 to 17 to 16. So it automatically adjusts and is completely immune to advances in computing power. Okay, so there's no danger in terms of kind of finding those hashes that are very special. But the actual protocol for actually signing transactions, digitally signing, that is more risky. So we use an algorithm called the elliptic curve digital signature algorithm, which has not been broken right now. If you know in some detail about these protocols, there's one called RSA, which effectively has been broken. And some of you have RSA tokens to get into whatever. You notice that they expire very quickly, and that's the reason. So as computing power increases, RSA is not used anywhere in blockchain because it's just not secure enough. The elliptic curve GSA is secure right now, but it at some point might not be secure. And that would cause a difficulty in kind of signing the transactions and having people potentially forge them. So it is like an arms race of cryptography. The good thing is that the advantage is on the person doing the actual encryption, not the person trying to hack into an encrypted document. So we'll see probably advances in that. We can always change the algorithm that's used. Yes, follow? No, not historically. But again, to go back and change history is very difficult. We're really talking about the stuff that's happening in the current blocks. To go back is just not feasible. So we could change the actual algorithm and we would be okay. So